Good morning, everyone. You're watching Trade Australia. Today's episode is a special edition all around foreign exchange. We've got our national partners in AFEX. They're joining us today to really help you navigate this unprecedented time that we're all facing with this global pandemic. So I'm joined both, not in studio unfortunately, but both via Zoom, by James King here in Melbourne and Marc up in Sydney. Thanks very much, guys, for joining me. So, gentlemen, I know that there's so many things going on with foreign exchange, and we look at the rates going up and down like a roller coaster. No one can predict Forex at the best of times, but what are some of the factors that you both noticed have contributed to this really strange up and down situation over the last few months? Obviously, the pandemic is a no-brainer, but other factors outside the pandemic, what's been going on?
Yeah, sure, Lawrence. There has been a lot happening, not just in currency markets, but in financial markets in general, and that's reflecting really what's happening in society right now with the COVID pandemic and the impact that it's having. Look, when you're looking at the currencies, I guess the key mover right now is really the US dollar. Mm-hmm. It's not an Aussie dollar play or a euro or a sterling play right now. It really is being driven by the US dollar. And over the last 4 months or so, it's been US dollar weakness that has that flooded the markets, and that's enabled the cross currencies, the likes of the Aussie against the US dollar, to appreciate. Why is the US dollar depreciate is I guess the key to understanding what is happening, and there's a number of factors involved. Over the last couple of years, you've seen a really steady appreciation of the US dollar, culminating in a recent high on the Dixie of around 103. That's close to all-time highs there on the US dollar, and you've just seen some profit taking in recent months on those positions, in conjunction with, of course, the Federal Reserve has unleashed an abundance of stimulus in recent months. The Fed balance sheets expanded ridiculously in the last 3 months, from about $4 trillion US dollars to about $7 trillion US dollars. So that weakens the currency, and that's played out in a number of areas. But currency traders have seen that as a key catalyst to really send the US dollar plummeting. So it's fallen from around that 103 mark down to about 92. So it's a reasonable fall in that period. Put it into context, it took about 26 months for the greenback to rally about 15%. Yeah. And it's taken 4 months for it to basically give up the majority of those gains. So it's been a pretty extreme move in that time. Wow. Marc, did you want to add anything further there to that analysis?
Yeah, I think to your point there, James, I think you're spot on in terms of that US dollar being the main driver of what we've seen with the Aussie dollar over the last few months. And just further point to your point about how much it's weakened in this short period of time. It's actually the most the US dollar has weakened in a 1 month period. This is up till about a week ago, in the last 40 years. So that is a significant move. And I think that if we relate it back to the GFC, where we saw, again, the Aussie dollar rise, the US dollar weaken in the 6 to 12, 18 months post the main catalyst for the GFC. Obviously now it's a different situation with COVID and totally different scenarios, but huge stimulus package again, which we saw back post GFC, and ultimately a currency weakener, as we've seen with that huge injection of, I guess, monetary easing is all you can call it, because we're in a period now, or a global scenario of record low interest rates across the major economies, the Eurozone, the US, UK, and now Australia as well. So in terms of interest rate intervention, we're really sort of capped as to what central banks can do. Yep. And we're seeing now that stimulus is really the weapon of choice for central banks to try and keep the economies going, to try and keep inflation off zero, or even moving into deflation, which is probably a huge concern. We don't want to end up going down the path of what we've seen with Japan over the last 20 years. Yeah. And so certainly now, the interesting thing that has happened of late is that with Eurozone putting forward their huge stimulus package, that's actually strengthened that euro currency significantly on the basis that it's supporting the group of economies that make up the Eurozone going forward. So it'll be interesting to see whether or not, as the months go by, we actually see that shift a little bit back and sort of see a weakening to the euro. But all accounts now is that everything is moving and strengthening against that US dollar. So to James's point there, yeah, we're on an upward trend basically because that US dollar is being sold heavily.
Yeah, and can I ask you both? So obviously that US weakening, things like the upcoming elections, the whole factor around unemployment rates in the US as well. Are those other contributing factors to that weakening of the US dollar?
They can be. They're probably not the driving principles behind what's happening, Lawrence, but they are certainly noise in the background that the market is paying attention to. Your key drivers, though, are going to be what the central banks globally are doing, and principally the Federal Reserve. As I mentioned before, the way in which they've expanded their balance sheet in the last few months has been astronomical, from 4 trillion to 7 trillion US dollars. So that money is what's driving things right now, and that money's trying to find a home. And you look at equities, the way in which they've surged over the last 4 months. That's because of this flood of money into the market. Commodity prices have also been bid because of it also. So those are the things that are really driving things. And then, of course, you bring back the bond market, which with all this stimulus and record low interest rates, bond yields have been decimated. So the bond yields are, again, a key driver of how the currency is performing too. So all in all, it's a combination of those things that are really driving things in the market right now.
Okay. One of the questions I've asked James and Mark is that some companies have asked me over recent times, how much of an impact is the trade tensions around China, not just with us in Australia, that's only, I suppose, a small part, very relevant for us here in Australia, but even that US trade tensions between China seems to be growing and escalating quite quickly. Are those other factors? I know what you just said there, James, but I mean, from a layman's point of view, we're not Forex experts with the sort of people that I talk to, they're importers, exporters, service providers, but how much of a factor is that China-US trade tension?
Yeah, I think the trade war is a really interesting story because you look at what drivers are either Aussie positive or Aussie negative, and I think that if we look back over the last few years, we know that, like you mentioned there with the election, as James was talking about how that might play out, that the US dollar strengthened significantly after Trump was voted in the 6 months post his election. So if we see a re-election of Trump, then we may see that US dollar strengthen again on the basis he's very US equity market positive, and Biden potentially maybe even the same. So on that side there, you have to look at how that trade tension story with China is going to play out. I was talking about this earlier today, even that, there has been many barbs back and forth, mainly from the US side towards China. We've seen that sort of dissipate of late, and you just wonder if that's because the election's so near, and perhaps maybe that's just on the sideline until the election is over, because that might not be a win-win for an election story. So, but certainly if you look at where the trade tensions went for the Aussie dollar in the 2 years up until we really hit COVID at the start of this year, trade tensions with China are not good for the Aussie dollar or the Australian economy, because we know that we're obviously very aligned with the US, and we're also very aligned from a trade perspective with China in terms of iron ore, in terms of many exports outside of that from the mining sector. So in terms of where we sit, it's a precarious position for the Australian economy to be aligned basically both with the US and with China, whilst they've got tensions midway. So any escalation trade war positions from those two sides as we move to phase 2 of the trade deal, certainly are not good for either the Australian economy or the Aussie dollar going forward.
Yeah. Thanks, Mark. It's a good insight because, as I said, layman's like us, we don't sort of understand all the nuances of it. But from an importer's point of view, I think it's good that the Aussie dollar's increased, so it helps that way. From an exporter's point of view, all they really want to know is, well, who can I keep exporting to? How much is this going to erode my profits? And those are the type of simple questions that it takes a lot of background expertise that you both have for us to navigate. But what I'd like to just touch on as well is, what are the things like here in the Australian economy? In your view, both of you, how is Australia perceived? I know traditionally we have been perceived as a really strong, robust, trusted financial market. Has that been damaged at all with, I think we've pretty much navigated COVID pretty well on a global level. Has that strengthened our reputation as a country for other investors looking at Australia as a safe haven?
Yeah, it's an interesting question, Lawrence, because I think there's a lot of factors there as well. I mean, looking at Australia over the last 30 years or thereabouts, where this is headline news, where we've seen so many months in a row of continued economic expansion, and we haven't had a recession over that period. So Australia has been seen globally as a strong economy. I think what Marc was talking about before as well, relating to the trade war with China and the US, China's been a key reason as to why Australia's been able to develop into the nation that it has. A lot of change has happened, of course, and a lot of your viewers will attest to it, where they've seen manufacturing change over the years. You've seen us go from being predominantly a manufacturing business to now a predominantly importation of a lot of our goods and services. So a lot of things have changed over the period. Australia's economy has been very fortunate that we've had China as being a key buyer of our goods, those that we export. So that's kept us afloat. We often joke about the Aussie economy batting way above its average. And in terms of the way that the currency trades and the volume of currency there is, the Aussie dollar, I think, equates to about 8% of total FX turnover, when we're only, as an economy, less than 2% of the global economy. So we certainly punch above our weight in a lot of key areas. That, at the moment, is beginning to be tested with a lot of factors. What we're seeing, COVID, the timing of COVID has created a lot of issues for many economies. You'd argue that we've handled it probably better than most other Western economies thus far, when you're seeing the levels of infection and death rates, et cetera, in the US and the UK, throughout Europe, et cetera. So, you could argue that Australia is probably somewhat better placed at this time. The interesting thing will be about what impact the prolonged trade war with China is going to have, and what impact that might have on the domestic economy over the longer term.
Yeah, thanks, James. That actually leads me to a question I want to throw at both of you is, well, if I throw up, let's say, three scenarios. One scenario is that the US election, Biden gets voted in. What could that do? Second scenario is that this vaccine doesn't emerge and coronavirus starts to, we've already had the second wave going around the world. What if that starts to exacerbate and we start to have more lockdowns again? And that third scenario is that on a domestic level, that we're seeing a massive prediction of unemployment here in Australia as well. So I know there's sort of three questions in one there, and maybe I'll leave it to you two to sort of tackle each scenario. But if you look at those three, the US elections, the exacerbation of the COVID pandemic around the world, and what that could mean to the Aussie dollar and the domestic economy going forward.
Yeah, I think this is a really interesting one that you put forward, because if you really put those, I guess, three factors and throw in the trade war scenario that's ongoing for China, and if you put all those things together, it's really difficult to come up with what direction A, economy is going to take, and B, currencies and equities alike. So, because I don't think anyone really anticipated that post-COVID we would have seen such a roaring back of positivity around markets, equity markets, despite what we've seen is largely an inability of the larger economies like the Eurozone and the US to contain, and the UK as well, and a lot of countries in Asia, to contain the coronavirus. And now we're even considering things like herd immunity as an option, which, months ago wouldn't have been on the table. But we're sort of faced with these decisions as to whether we just take the economy and survival of the economy versus, what might end up being a far greater death toll in the long run. And we really haven't seen any negative impact from this. So to raise your point as to, if we do see economies shut down again, how might that impact the markets? I think probably what we saw in March was a very significant impact just because of the uncertainty. Whereas I think we've now come to the point where the markets really sort of digested the fact that, there's going to be impacts longer term, but it's not going to be as significant as we first thought, which we often see when these type of black swan type events occur. Immediate, very significant reaction, and then as time goes on, we realise the world's not going to end. So I think what we might see from that is that we might see markets have another jolt, move lower. I think on the horizon, something that probably would have more of a greater impact would be something such as like we saw, again, back to looking at the GFC, Greece, defaulting on the back of the economy not being able to sustain the impact of that earlier event. So if the event or event risk, which being COVID, results then in something perhaps on a second or third tier economy, which broadly has a greater impact on the greater financial system, comes along over the next 6 to 12 months, well then, I think we'll probably see another significant risk to the downside on the basis of uncertainty again. So I think, a lot of things that we can't really tell what the direction would be. But what I'm certainly seeing now is that despite all of the fallout of COVID, that we're really seeing a market that's just normalising a little bit and just settling down, as we're seeing with this last month, despite the fact that we're seeing broader US dollar weakness. The Aussie dollar's come 30% higher off the lows back which we reached in March. I think we're still in an uptrend in terms of the Aussie. We're still in a downtrend in terms of the US, but perhaps maybe at a slower rate until further news comes through, further events come through, if that makes sense.
I think, it's very much so, Mark. And to then go into that second question, Lawrence, around the longer term impacts of COVID and what it might mean. It's really interesting to sort of speculate on it, but also to analyse it at the same time and try and work out what those implications might be. We talk a lot about the potential economic impact of shutdowns and the death rates and things like that, the disruption to society. But one thing we don't talk a lot about is actually the mental health side of things. And this might, comparing even myself and Marc right now, I'm broadcasting to you live from my son's bedroom because I'm in lockdown here in Melbourne, whereas Marc's in Sydney in the office and playing golf tomorrow, I hear. So very jealous of the prospect of being able to get outside.
Very different worlds, only down the road from each other.
Yeah, absolutely. So I think for businesses as well, this is something we need to consider too for your viewers, is the potential impact on society of what's transpired, what it's going to look like going forward. We sometimes talk about, can we resume and go back to normality? Well, what does normality look like? And I think that in a post-COVID scenario, I think that normal is going to change for better or worse, but it will change. Yeah. And what's going to be important for businesses is how they adapt to those changes. Yeah. And there's a lot to do. There's a lot to adapt to in that regard. But it's going to be those businesses that are dynamic, those businesses that are thinking outside of the square. They're taking on board technology and using technology to its fullest advantages to help them in their business, to automate processes, and of course the changing dynamics of the labour force, I think as well, are going to be very interesting too on a number of dynamics. People working from home, or away from offices, away from the principal place of business. Yeah. Potentially businesses not needing the same amount of workforce as what they did previously as well. So I think there's going to be a lot of, I call it a mini revolution in a labour force perspective that will deliver various results for businesses going forward. But I think the key is to be adaptive.
Yeah, no, it's a really valid points, and some of the things I want to ask you both about are exactly those type of adaptations and as that whole buzzword about pivoting. So I want to cut to a break and have a word from our sponsors, but I want to come back after the break and talk about some of those benefits of being adaptable, flexible, and how quickly companies can take advantage of this new norm, as you say, James. And then I want to talk to you both about what strategies importers and exporters should be looking for and what they can start implementing as an opportunity moving forward to really strengthen their business as part of this situation, not just for now, but even for the long-term future. So stick around. I'll come back to you straight after this break. So we're going to go to a quick break, as I just mentioned, and a word from our sponsors. Stick around straight after that, and we'll be joined with Marc and James again, just a few more questions.
Welcome to the Australian Trade and Logistics Corporation. We help Australian companies expand globally and improve their end-to-end supply chains. The most successful businesses are global businesses. ATLC helps you navigate and optimize the nuts and bolts of global trade. Grow and innovate your distribution, improve customer service the right way with less risk and more profit. ATLC runs monthly events all over Australia for you to meet and learn from other importers, exporters and industry professionals. Stay up to date with the latest in international trade changes, opportunities and supply chain innovations. Our members get introduced to the widest range of industry-specific experts who can each contribute to the growth of your global business. ATLC collaborates with industry partners and trade agencies from all over the world to introduce our members to global suppliers, buyers and investment. Be part of Australia's best community of importers, exporters, logistics and associated service providers. In simple terms, ATLC helps businesses grow globally faster and smarter. For more information, contact us today.
Welcome back, everyone. You're watching a Forex Special, the Forex Insights with Trade Australia. I'm your host, Lawrence Christophels. We've got the pleasure of having James King and Marc Lin from AFEX, our proud national partners of all things foreign exchange, and they've just shared a whole range of expertise. No one can crystal ball it, but with experts such as James and Marc, who are there to share their wealth of experience and knowledge about what's been occurring with global markets and what potentially could happen. I mean, no one can know, but we've got a great privilege to tap into some of their skills. Now I want to ask you both. So guys, we just went before the break. We talked about companies who really have identified ways to innovate, be adaptable, be agile. They're the ones who have really strengthened out of this situation. And moving forward, everyone definitely recognises that the more embracing you are of proper smart business practices, business strategies, but importantly, business partnerships as well, how they can work collaboratively together to come up with positive outcomes, is one of the things that I want to throw at both of you. So obviously as Forex specialists and AFEX as an organisation, what should importers be looking for? What can they be doing to mitigate their risks? Because most companies, well, not most, but a lot of companies take that for granted in Australia, very different to other global markets where they are more proactive, more embracing of Forex specialists, where in Australia companies have been a bit more complacent. Hopefully this pandemic has made people realise that they need to fine-tune all those one percenters in the business. So I'll start with both of you. As an importer, what should companies be thinking about, and what type of strategies or even products and services that they should be considering to move forward, not just now but in the future for the business?
I might jump in here and start off, Lawrence, in terms of, I think, from the import side, there's two types of scenarios we've got right now with the market this year. Is that we've seen a huge move in the Aussie, 30% down from the start of the year, and then 30% back up, pretty much 3 months after the COVID. So it's a huge move. Normally in a normal trading year or calendar year, we'd see about a 12 to 15% move, which is somewhere between 7 and 10 cents as a range, and that's what we've seen probably the last 3 or 4 years. Even taking into account the Brexit year, where we saw obviously a lot of volatility there back in 2016 and the US election when Trump came in. So, we've seen a huge move this in the 6 months to start this year alone. So, there is, for an import, obviously, business, you're looking at buying at the best possible levels. And for most companies and most industries, they're fairly competitive, tight margin-based business models. So, as you said, every percentage point counts, unless you're lucky enough to be in those industries where you're still, getting 30 and 40% profit margins. So certainly the hedging piece is really important. When you're seeing large years like this of large volatility, you certainly don't want to be making decisions that are going too far out. A shorter time frame is probably a smarter play, because even though we've seen a huge rally back the other direction, back up to above 70 now, we reached a low of 55 cents there at the end of March. You don't want to be going too far ahead, but you don't want to be doing nothing either, because if the market does, for whatever reason, and I think we mentioned the previous segment there, turn the other way because of another major market risk that we don't know about yet, then you don't want to be sitting there doing nothing because the market was going up. So that's where hedging, risk management, it really comes into play, because what you ultimately might give up today potentially can save you a huge amount in the months to come. So certainly what you're really trying to do is protect the downside, but allow yourself some form of participation should the market trends continue, but not really taking too much of a longer term view, simply because we just don't know what's ahead. Yes, things have sort of started to normalise, and we're starting to see that, despite what seems to be counterintuitive to what we're actually seeing in the news and globally, as we discussed earlier as well. So yeah, it's shorter term time frame decision making, but ultimately protection should things turn is probably the main point from. Yeah.
So it sounds like to give yourself some level or bandwidth of certainty instead of all this uncertainty that's all around us globally as well.
Absolutely.
I think I just add to that as well, Lawrence, in that back to the intro there that you gave around businesses being adaptive to whatever challenges they're facing right now and being able to overcome those. I think a lot of discussions we're having with businesses right now around their FX, it actually comes back to, well, how can we help them within their business? How can we shore up the FX component, which for importers, the cost of goods sold is going to be their biggest line item as an expense within their P&L statement. How can we help them shore up their P&L to protect their business? But also, if we can create FX gains within that business, how can those FX gains be used? Can they be used to look at alternative, maybe looking at supply chain, looking at alternative ways in which they can source their goods? Maybe it's used on the domestic front, and that with the lockdowns we're seeing, particularly in Melbourne and Victoria, people are moving to online. That comes at a cost, right? I mean, you've got to develop a website. You've got to be able to develop the back end of your business so that you can supply and send out goods via an online means. Do you need to work on marketing, SEO? All those things, they cost money, or at least time and expertise. So how can we help you shore up your business on the FX front to help use those funds to invest in your business over the longer term? And I think that's a really important factor for businesses to consider particularly in this environment, in a changing society, that you need to be adaptive and ready to face whatever obstacles are thrown your way.
Yeah, I think that those are really strong points, James. I think every business now, no matter what sector, what market you're dealing with, everyone is literally trying to wring the towel to get every ounce of profit, but efficiency, innovation, technology out of their business as possible. And I think it has, as I mentioned before, I think it has woken up a lot of Australian companies, especially, that they do need to surround themselves with experts. They do need to look at how they can use that term share of wallet. Who's going to give them the best bang for buck when it comes for their trade finance, their Forex? What's going to release some cash flow opportunities for them as well? I mean, you guys offer lines of credit that could actually complement a lot of people without bricks and mortar security. So you've got a whole range of other strategies and solutions and product service offerings that companies may not be aware of because they have been comfortable over the last couple of years, and now this has shaken up global supply chains in a way that's never happened before. And companies really need to, as you said, reinvest in transforming their business for a much more smarter, more efficient way. So what about on the other side, guys? As an exporter, I'm sure it's pretty much similar, but as exporters, they might be thinking, okay, well, if this continues, this is going to really erode our margins. What sort of other solutions could you offer there to exporters, or tips and advice?
Yeah, I'll jump in on this one again there, Lawrence. I think, on the import side, it's funny because you really, when there's a trend forming and we're seeing this uptrend, it's on the other side of the equation where you've got exporters who, for a period there in March, April, and May, were, cheering when the market was sub 65, are now facing the situation where not only are we back to pre-COVID levels, we're actually higher on the Aussie to where we were going back to July of 2019. So when you look at that side of things, inaction can actually end up costing the business a lot of more pain should you do nothing. So you're trying to navigate how you then either act on the market going too far against you, which we try and really avoid as a business. We try and help guide our clients around, yes, the market's moving against, but let's not just move or act here because of the fact that it's gone to the point where it's eroding what would be a profitable scenario on that shipment order that's coming in. So in terms of how we approach that, it's a little bit different to the import side. And in terms of product basis as well, a little bit different. But what we really try and look at with customers is not just the product as such. I think the product is really, of which there are a number of different scenarios. It's only a small part of the overall equation. The biggest part is where the business, as James was talking about, is positioned, what type of scenario that business is in, what type of industry it's in, whether the competitiveness level and profit margin basis as well, and also what the budget levels are to where the Aussie is compared to what they're trying to achieve. So looking at the business situation and also what the market is doing, which obviously this is the standout year for the market, what the market is doing, and then making that link back to what scenario or strategy we put forward. And really those three key areas combined is what makes the approach for the individual business. And especially when it has moved as much as it has over the last 3 or 4 months, we're seeing a lot of banks and analysts saying that we're expecting a 75 or 80 cent Aussie dollar in the next 6 to 12 months. So there's another 10% or more move ahead if they're right. So look, that's not to say that it's going to happen in the next month or two, but there's a fair bit of move there if that's the case.
Yeah, I think, Marc, definitely what's come out of this whole situation is that companies know that there's no such thing as certainty anymore, and especially for the next couple of years, I think there's a whole range of volatility that is still to be played out. And if I dumb it down, let's say if I put on an importer or exporter hat, I've got enough stuff to worry about with my staff, my technology, the safety, workplace locations, all these type of IT situations. There's so much piled up on my plate now as an importer and exporter. The last thing I've probably got time for is to try and keep track of those market situations the way you two do. I mean, there's there's just only so much any company can deal with, and they can't be experts in all fields. So I think, again, this is where companies have really recognized that light bulb moment's gone off, where they think, you know what, we can't manage all this stuff ourselves. We do need to surround ourselves, like Henry Ford used to say, you know, I don't need to be an expert in everything. I just need to surround myself with people who are. And that's really what I see as a major value for AFEX, and why we're so proud to have you as partners, because you are that, you know, I mean, just by listening to both of you today, it stands out like the proverbial, I won't say it, but you know, how much you have that wealth of knowledge and expertise, which companies need to be proactive about, as you both talked about, so they can get back to focusing on how they can grow their business, not just to survive, but to also adapt it to make sure that they continue to grow and survive and prosper in the coming months and years as well. So it's a really valuable session that we've had today on the show, and I really thank you both for sharing your time, your expertise. You're very generous with that, and I encourage all the viewers to get in touch with AFEX, because as you just heard, there is so much yet to play out. There's so much uncertainty, but you can mitigate that by having in place, first and foremost, the right partners. Secondly, a customized approach to your business about what they can do, whether you're an importer, exporter, or sometimes even both. So, guys, I just want to wrap up with any parting words, any sort of tips and advice that you'd both like to share with the viewers for this episode. And I'll definitely get you back on again in a couple of weeks just to touch base, as things will, you know, those sands will shift and evolve going forward. But any parting words to the viewers for today's episode?
I think, Lawrence, it's just important that businesses are proactive when it comes to the FX side of things. Often it's very easy for a business to just let it slide, and it goes from being, you know, maybe number 2 or 3 of importance down to 10 or 11 because of everything that's happening. And I think what you said before is sort of aligns really well. But I think if a business devotes the time initially to getting the setup right, it takes a little bit of time to do it, but devote a little bit of time to getting it right in the first place. And then all you need to do then is execute on the strategy and then review periodically. Yep. And I think if you're doing that the right way, that you know, the FX will take care of itself. And then a byproduct of that is that you can sleep at night knowing that that's taken care of, and you can then focus on the hundreds of other activities that you need to focus on as a business owner or a CFO, director, MD, whatever your role is. And if, you know, growing your business is probably going to be the number one priority. Well, you want to be able to devote time and resources to be able to doing that. You don't want to be having to worry about the risks of the markets moving one way or another. Yep. So being proactive, I think, is a really key point for business.
Yeah, great advice, James. What about you, Marc? Any final words for this episode?
I think echoing sort of James's sentiments there, I think complacency is a killer in this market, in the currency game. And I think that also having one play and one play only is also a detriment to many strategies, I guess, because as you both mentioned there, that, you know, a business owner has so many different hats they have to wear and so many different things that have to be across the business, that sometimes once they get comfortable in a way of managing their foreign exchange, either by a particular strategy or a view on the market, and we know that things can change pretty quickly in financial markets and currency markets. So I guess being able to adapt to that, as I said, what worked in 2019 is not working in 2020. Taking a longer term view was fine for a few years. Now you need to take a shorter term view. The types of strategies that suit longer term views versus shorter term views are different. And I guess having a business partner or someone that is working alongside that can help just to put forward those different scenarios based on those types of market conditions is of a benefit, because you don't need to be an expert in currency options or risk management. You just need to know someone who can help you navigate that when the conditions of the market change.
Yeah, no, fantastic. I totally agree with both sentiments that you both put forward there, Marc and James. I think, you know, I really try and keep it simple when I talk to companies about why you need to be talking to AFEX. It's really simple. You know, you can't be a one-trick pony when it comes to AFEX or any finance products for that matter. But these days, you need to have a whole variety of tools in that toolbox. And you need to have the relationship. You need to be able to trust someone who's going to tell you what they truly think that's right for your business, not just a blanket approach for anyone. So thank you so much for both of you for sharing your insights and time today. I'm sure the audience and the viewers will really wake up to themselves and realize that this is something that is only going to get a bit more challenging before it gets easier, but it is a fantastic opportunity for them to rethink their forward strategies, rethink their whole supply chain, and how they can really collaborate on a smarter, more efficient way for the long term. So thanks again, guys. Look forward to chatting again soon. Stay safe. Marc, enjoy the golf. We're jealous, but hopefully in a couple of weeks we can get out ourselves.
Thanks, Lawrence. Look forward to hearing the score, Marc. Good on you.
Thanks, guys. All the best. So there you have it. Today's episode, all about Forex Insights. It's a really important and timely one. As we mentioned, no one can predict what's going on in the future, but what we can do collectively is surround ourselves with the best experts and the best partnerships to really strengthen and support the way we do business going forward. So thanks so much for joining us. Stay tuned. We'll have another episode coming up with Forex Insights in a couple of weeks just to stay abreast of all those emerging changes. Take care, stay safe, and we'll see you very soon.